Hi everyone, in this video we will be going over A-Level Accounting 2022 May-June Paper 3-2 question number 5. This is the structured paper 3 which consists of 6 questions, each of 25 marks, and we're also given a time limit of 3 hours, which means that ideally we should be spending about 30 minutes in order to solve each question. And in this video as well, we will be attempting to solve this question number 5 under 30 minutes. So without any further delay, let's get started. The directors of V Limited are concerned about the company's future cash position. They have asked management accountant to prepare a cash budget for the 3 months ending on 31st August 2022. So that will be for the month of August, July, and June. Okay, we're given the following information. We're given the information regarding the actual sales for the month of April and May and the budgeted sales for the month of June, July, August, and September. Then we're also told that all sales are on credit and all customers pay 2 months after purchase. So this just means that if the customers bought goods on April, they will actually make this payment of 234,000 on the month of June. Similarly, for the case of May, they will pay this amount of 210,000 in the month of July. Then the goods are sold at a markup of 50%. So this just means that our selling price is 50% more than the cost price. So that will be cost times 1 plus 50%, which you can write down as 0.50, which just means that our cost price is going to be sales price divided by 1.5. And we're also told that the goods are purchased 1 month before sales. So let's figure out our purchases. For the month of April, the goods will be purchased in the month of March. So for March, April, May, June, July, and August. And we'll be just utilizing this formula that our purchase will be equal to sales divided by 1.5. So for the purchase in the month of March, it will be equal to the sales in the month of April divided by 1.5. So that's 234,000 divided by 1.5, which results in the amount of 156,000. For the month of April, that will be 210,000 divided by 1.5, which results in 140,000. For the month of May, that will be 195,000 divided by 1.5, which results in 130,000. For June, that will be 207,000 divided by 1.5, which results in 138,000. For the month of July, that will be 228,000 divided by 1.5, which results in 152,000. And finally, for the month of August, that's going to be 216,000 divided by 1.5, which results in 144,000. All right, then 60% of the purchases are paid for in the month of purchase. So 60% of this amount of 156,000 will be paid in the month of March in order to get a 2% cash discount. So let's figure out the actual payment done in the month of purchase. So that is just going to be the purchase price times we're only paying 60% of it, so that's 0.60, and we're also getting a cash discount of 2%. So that means we do not have to pay the 2%, so that's 1 minus 0.02, and this results in 0.588 purchase. So we'll be paying 58.8% of this amount of purchases in that particular month, whereas the remainder is paid in the following month, which just means that we pay 40% of the purchases in the following month. So if we're talking about this amount of 156,000 for the month of March, then 40% of this amount will be paid in the month of April. All right. Then V Limited keeps no inventory at the end of each month apart from the goods purchased for the following month's sales. Wages of 50,000 and overheads of 20,000 are paid in the month in which they are incurred, and wages are expected to increase 10% from 1st July 2022. So let's figure out the new wages. We have the previous amount of 50,000. Now we just need to increase it by 10%. So that will be 50,000 times 1 plus 10%, which we can write down as 0.10, and this results in the amount of 55,000. So the wages will be 55,000 starting from the month of July. Then rent, which is 60,000 per annum, is payable half yearly in advance in July and January. So this is the total rent per annum, and it is payable half yearly, which means that in July as well as January, we'll be paying half of this amount. So that will be 60,000 divided by 2, which results in 30,000. So 30,000 will be paid in the month of July as well as in January. And we're also given the bank balance on 1st June 2022 to be 33,000. Okay, let's have a look at our first question. We need to explain one purpose of preparing a cash budget. This is quite simple. We prepare a cash budget in order to identify any short-term or long-term cash needs of the business caused due to a cash deficit so that the management can take action in order to avoid those problems by raising our finance. Let's write it down. To identify short or long-term cash needs because of a cash deficit so that management can take action to avoid the problems by raising finance. This concludes the first part. We can now move towards the second one. We now need to prepare the cash budget for each of the 3 months ending 31st August 2022. So we have the month of August, then we have the month of July, and we have June. Okay, and we can start with our opening balance. We were given expected opening balance for the month of June, so let's have a look above. So we were told that the bank balance on 1st June is expected to be 33,000. This will be the opening balance. Now we just simply add all of our receipts and then all of our payments. So let's have a look above. The only receipts will be from our sales made, and we are told that all customers pay 2 months after purchase. So if we're talking about June, we'll be receiving the amount of sales made in April. And for July, we'll be receiving the amount of sales made in May. And for August, we'll be receiving the amount of sales made in the month of June. So we just need to write these amounts of 234,000, 210,000, and 195,000 for the months of June, July, and August respectively as receipts from the customers. Let's write it down. So that was 234,000 for June, 210,000 for July. Then we had 195,000 for August. And this concludes all of our receipts. Okay, so now we can move towards our payment section. And firstly, we will be recording the payments made to suppliers. And we know that 60% of all of the purchases is made in the month of purchases after receiving a 2% discount, right? So we have current month purchase. And then we have the previous month's purchases because we need to pay 40% of all of our purchases made last month in this month. So that will be last month purchases. Let's calculate these amounts. So for the month of June, we will be paying out 0.588 times this amount. So let's figure it out. For June, that will be the calculated amount of 138,000 times 0.588. This results in the amount of 81,144. Now for the month of July, we have the calculated amount of 152,000. Then we just multiply it by 0.588, which results in the amount of 89,376. And for the month of August, we have the calculated amount of 144,000 times 0.588, which results in the amount of 84,672. So we just need to record these three amounts under the heading of current month's purchases. Let's write it down. So that will be 81,144, 89,376, and 84,672. Then let's calculate our last month purchases. So if we're talking about the payments to be made in the month of June, we need to pay out 40% of the purchases made in May. For July, that's going to be 130,000 times 40%, which we can write down as 0.40, which results in the amount of 52,000. Then for July, we'll be paying out 40% of the purchases made in June. So that will be 138,000 times 40%, which results in the amount of 55,200. And for the month of August, that will be 40% of the purchases made in July. So that's 152,000 times 40%, which results in the amount of 60,800. Now let's write these 3 months in our budget. So the first one was 52,000, then we had 55,200, and then we had 60,800. Then we also had other expenses such as wages and overheads. Let's have a look above. We are told that wages of 50,000 and overheads of 20,000 are paid in the month in which they are incurred. And we are also told that wages increased to 55,000 from July. So for the month of June, wages will be 50,000, and for the month of July and August, it will be 55,000, whereas the overheads are going to remain constant at 20,000 for all 3 months. Let's write these two headings. So firstly, we have wages, 50,000 for June, 55,000 for July, and 55,000 for August. And then we have our overheads, 20,000 for all 3 months. And then we were also given information regarding rent. We were told that rent of 60,000 per annum is payable half yearly in advance in July, which means that we need to record this payment of 30,000 made in the month of July, but there will be no payments for rent in the month of June and August. Let's write it down. So we have rent to be 30,000 only for July. And this concludes all of our payments. So let's figure out the total for payments for the 3 months. Starting with June, that will be the sum of these 4 amounts, 81,144 plus 52,000 plus 50,000 plus 20,000, which results in 203,144. Then for the month of July, that will be the sum of these 5 amounts, 89,376 plus 55,200 plus 55,000 plus 20,000 plus 30,000, which results in 249,576. And for the month of August, that will be the sum of these 4 amounts, 84,672 plus 60,800 plus 55,000 plus 20,000, which results in 220,472. Alright, now we move towards figuring out our closing balance for each month. Let's start with the month of June. Our closing balance is just going to be the opening balance plus all of our receipts minus all of our payments. So for June, that's going to be 33,000 plus 234,000 minus 203,144, which results in 63,856. Now remember that closing balance for this month will act as the opening balance for next month. So the opening balance for the month of July will be 63,856. Let's write it down. And now the closing balance for July will be 63,856 plus 210,000 minus 249,576, which results in 24,280. Now this will be the opening balance for the month of August. So that will be 24,280. Now the closing balance for August is going to be 24,280 plus 195,000 minus 220,472, which results in a negative balance of 1,192. Okay, this concludes the second part of this question. We can now move towards the third one. We now need to prepare the budgeted income statement for the 3-month period ending 31st August 2022. So we just need to prepare our income statement for the months of June, July, and August. Let's write it down. If you remember the format for our income statement correctly, we always start with all of our sales or revenue. So let's write it down. Let's have a look above. We were given the sales for the 3 months above. We're talking about June, July, and August. So that's going to be the sum of these 3 months, 195,000, 207,000, and 228,000. This results in the total sales for 3 months to be 630,000. So let's write it down. That will be 630,000. Now the next step would be to subtract all of our cost of sales. Again, let's have a look above. We were told that there is to be no inventories, right? Which just means that there will be no closing inventory and opening inventory. So the only item in our cost of sales will be that of purchases. We have already figured out the purchases for these 3 months. And this might be a bit tricky because we are told that goods are purchased 1 month before sales. But we need to record the corresponding amount of purchases for the sales of 195,000, 207,000 and 228,000. So we can see that we calculated the purchases corresponding to 195,000 right here, and 207,000 right here, and 228,000 right here, which means that the total of our purchases should be the total of these three amounts. So that's going to be 130,000 plus 138,000 plus 152,000, which results in 420,000. This will be our cost of sales that we require in the income statement. Let's write it down. So that will be 420,000, and we need to subtract this amount in order to get our gross profit. Now the gross profit in this case is 630,000 minus 420,000, which results in 210,000. Now the next step would be to add any of our incomes. So that will be plus incomes. And in this case, we have incomes because we have been receiving the discount of 2%, right? So that will be our discount received. Let's have a look above. And we have been told that we get a 2% discount on the 60% of purchases. Now again, this might be a bit tricky because we are talking about the month of June, right? Which means that we are making the payment for 138,000 this month. So we'll be getting the discount corresponding to this value of 138,000. Similarly, for the month of July, we'll be getting the discount corresponding to this value. And for the month of August, we'll be getting discount corresponding to this value. All right, so let's figure out the total discount received. We first start with these three amounts. Let's figure out its sum. So that will be 138,000 plus 152,000 plus 144,000. Then we also know that only 60% of these are paid in the months of June, July, and August. So we just multiply it by 60%. And we know that we're getting a discount of 2%. So now we multiply it by 2%. Now this results in the total discounts received to be 5,208. Let's include this amount in our income statement. And this is the only income, which means that now we can figure out all of our overheads or expenses. So the expenses given were wages, our overheads, and rent. Okay. And we can see that the wages for the months of June, July, and August were 50,000, 55,000, and 55,000. So we just need to add these three amounts. That will be 50,000 plus 55,000 plus 55,000, which results in 160,000. Let's write this in our income statement. Now for overheads, we can see that it's 20,000 for 3 months. So now again, the sum is going to be 20,000 plus 20,000 plus 20,000, which results in 60,000. Let's write it down. But for rent, we cannot write this amount of 30,000 because this is the amount that we're paying, but it does not correspond to the rent required for these 3 months. Let's have a look above. We were told that the annual rent is 60,000 and we only need to include the rent for 3 months. So let's utilize our unitary method. For 12 months, the rent is 60,000. For 1 month, the rent will be 60,000 divided by 12, which results in 5,000. And we require the rent for 3 months. So that is just going to be 3 times 5,000, which results in 15,000. Let's write it down. Now let's figure out the total expenses. So that's 160,000 plus 60,000 plus 15,000, which results in 235,000. And we need to subtract this amount. So let's figure out whether there was a profit or loss by adding income to our gross profit and subtracting the expenses. So in this case, that's going to be 210,000 plus 5,208 minus 235,000, which results in the negative balance of 19,792. Since this is a negative balance, this will be our net loss for the period. This concludes the third part. We can now move towards the fourth one. We're given additional information. The director suggests a new credit policy to improve the cash position of the company for the 3 months ending 31st August 2022. A 3% cash discount is to be allowed to customers who pay 1 month after sales, and it is estimated that 50% of the customers will take the cash discount. This new credit policy would apply to all sales made in May and thereafter. Now we need to calculate the effect of the new credit policy on the company's cash receipts. So we're only talking about receipts for each of the 3 months ending 31st August 2022. So let's figure out the receipts under this new policy. We are talking about the months of August, July, and June. And now we're being told that 50% of the customers will make payment after 1 month of sales, which just means that for the month of June, we'll be getting the amount from our April sales because that is after 2 months, as well as the May sales. And for July, we'll be getting the amount for May sales and June sales. And for August, we'll be getting the amount for June sales and July sales. Let's talk about the amount being received after 1 month of sales. We'll be getting 50% of the customers, right? So that will be sales times 50%. And we're also allowing a 3% cash discount. So that will be times 1 minus 3%. So this results in 0.485 sales. And remember that this new credit policy is going to be applied to all sales made in May and thereafter. So it will not apply to the sales made in April, which means that for the sales made in April, we'll be utilizing the previous policy where the payments will be made after 2 months. So let's have a look above. For this entire sales of 234,000 made in April, it will be received after 2 months in the month of June. So let's write down this amount of 234,000 for June. Now, since we're applying the new policy from May, it just means that 50% of this amount after receiving a 3% discount will be paid in June. So for June, that's going to be the sales made in May of 210,000. And after getting a discount of 3%, we figured out the number to be 0.485. So we just multiplied by that. And this results in the amount of 101,850. Let's write down this amount under our May sales. So that's going to be 101,850. Now the remaining 50% of the sales made in May will be received in the month of July. Let's figure out that amount as well. So for July, that's going to be 50% of this amount of 210,000. So that's 210,000 times 0.5, which results in 105,000. Let's write this amount down. So that's 105,000 for July. Now let's talk about our June sales. Again, 50% of this June sales after receiving 3% discount will be received in the month of July. So let's figure out that amount. That's going to be 195,000. And after receiving discount, that will be 0.485. This results in the amount of 94,575. Let's write it down. And the remaining 50% will be received in the month of August. So now for August, that's going to be the amount of 195,000 times 50%, which results in 97,500. Let's write this down. Now let's talk about the sales made in July. We'll be receiving 50% of that amount after receiving a 3% discount in the month of August. So that will be 207,000 times 0.485, which results in the amount of 100,395. Let's write it down. Now this will give our new total receipts under the new policy. So total receipts under new policy. For the month of June, that will be 234,000 plus 101,850, which results in 335,850. For July, that's going to be 105,000 plus 94,575, which results in 199,575. For August, that will be 97,500 plus 100,395, which results in 197,895. Now, we were told we need to figure out the effect of the new credit policy. So we need to compare this new total receipts with the previous receipts. So let's write down our receipts before new policy. We have already calculated it above. So the previous receipts were 234,000, 210,000 and 195,000. Let's write it down. So that's 234,000, 210,000 and 195,000. Okay, now we can figure out the net increase in cash inflows. And this is just going to be the difference between total receipts under new policy and receipts before new policy. So for June, that's going to be 335,850 minus 234,000, which results in 101,850. For July, that's 199,575 minus 210,000, which results in negative balance of 10,425. And for August, that's 197,895 minus 195,000, which results in 2,895. This concludes the fourth part. We can now move towards the fifth one. We need to comment on the effect of the new credit policy on the company's profitability for the 3-month period ending 31st August 2022 by supporting our answer with calculations. So there will be only changes in the time frame of receipts and payments, but this does not affect our income statement since we only include the actual sales and the actual purchases for those 3 months. But remember that we are now allowing a new 3% discount. So this will definitely affect the profit. Since we're allowing the discount, that will be our expense. So let's just first figure out our total discounts. Let's have a look above. We are providing discount on the sales made in month of May, June and July in the months of June, July and August, right? So let's figure out the total of these 3 amounts. That's 210,000, 195,000 and 207,000. Let's calculate the discount allowed under new policy. So that's the total of 210,000 plus 195,000 plus 207,000. And we're only providing discount on 50% of these amounts since 50% of these amounts were to be paid 1 month after the sales. So that's times 50%. And the discount that we're applying is at the rate of 3%. So that's times 0.03. Now this will give the new discounts allowed to be 9,180. And remember that discount allowed is an expense which should be subtracted in order to figure out the profit, which just means that now our profit will be reduced by this amount of 9,180. Let's write it down. The profit for the period will be reduced by 9,180. Alright, this concludes the fifth part as well as the entire question number 5 of 2022 May-June paper 3-2. If you found this video useful, make sure you like the video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.